Hello everyone, how's it going? In this video, we will cover Bed Bath & Beyond, trading under the ticker symbol BBBY. The market has been volatile recently, with many equities being up and down big time. So many people are interested in the stock BBBY because of the short squeeze potential. In this video, we will take a look at the stock from a technical and fundamental perspectives and determine what would be the best approach. If you appreciate my content, please consider to drop a like, comment, and subscribe to my channel. Also, please check out the links in the description below, as every help is greatly appreciated. Over the past few days, the BBBY stock price remained relatively constant at around 80 cents a share, which seems to have reached a floor after such a drastic sell-off recently. I mean, although this is a very low bar regarding where the stock will be priced at, I still believe that the current floor is going to be a solid one that it's going to hold, and it can hold BBBY to a level that is still fairly close to the symbolically significant level of $1. I believe that we should have a talk about whether BBBY deserves to have a second chance in our portfolio despite the major headwinds that are already here now, and also the ones that we can anticipate as the recession looms closer. I think that ultimately a very probable scenario is whether BBBY can have a short-term volatility movement on the upside, which can provide a trade opportunity for the short-term traders. Bed Bath & Beyond is a home goods retailer operating under the ticker symbol BBBY. It is founded back in 1971 and is headquartered in New Jersey, operating stores in the States, Canada, and Mexico. The company has a wide range of products at home, including bedding, bath towels, kitchen electrics, cookware, window treatments, storage items, and so on. They carry a lot of home decor, giftware, and housewares as well. The company operates both physical stores and e-commerce websites, giving the opportunity to shop on both platforms. One of the key strengths of BBBY is the strong brand recognition. The company has built a good reputation over time, offering great products and competitive prices, which has attracted a loyal customer base over time. So, another strength of the company is the diversified business model, in the sense that they sell a lot of different kinds of goods that are non-perishable to the customers. So in some sense, I would say that this diversification helped the company to mitigate the risks and to generate stable revenue streams. BBBY is also successful in developing strong relationships with suppliers, which is very important for a retail business. So they have been able to secure those relationships with competitive prices, timely payments, and also being a reliable business partners to its suppliers. Now, with that being said, the company remains under significant sell-off pressure due to the company's specific and macroeconomic factors. The main reason people are interested in the stock might be because of the stock price itself or the volatilities from the stock market rather than on the fundamental side, because fundamentally, BBBY is a retailer with a lot of brick and mortars. This is something that you don't necessarily want to see in today's economics, given people's shopping behaviors. Over the past 5 years, BBBY's revenue steadily decreased, with a decline of almost 20% between 2017 and 2020. This decline has been accompanied by a decline of earnings as well, as the company reported losses for several of its past 5 years. In terms of stock performance, BBBY's shares have been under pressure in recent years, having lost about 70% of their value since the peak of 2015, and since then underperformed compared to the overall market. It has also been facing increasing competition from e-commerce giants like Amazon, which has made it difficult for the company to maintain the market share and to drive additional sales growth. Also, the company has been struggling with declining sales in its physical stores and increased competition from the online retailers. To address this issue, the company has been focusing on store closures and cost cutting. They closed down many underperforming brick-and-mortar stores and are looking to reduce its workforce. closing distribution centers, and consolidating the supply chain. So those measures are certainly good, but it's hard to say if they're enough. In fact, we're almost certain that they are not. Because despite those efforts, the company's financial performance has not really improved significantly over time, and in the most recent quarter, the company reported a decline in comparable sales, and the company's guidance for the next quarter can also be weak. So, this is not the only issue facing the company. Those financial results are now affecting the company's assumption that it'll continue to exist. The current sharp decline in BBBY's price action is mainly caused by this concern, which also incidentally created a great amount of volatilities. More than 40% of BBBY's equity is owned by people that we can call institutional shareholders. In other words, they manage other people's money. The rest is owned by retail traders, people like you and I. This means that while the stock has a relatively high volatility, in theory, it's also a good stock to invest in for the long term, if there were no going concern issues. So, one key behavioral difference between institutional and retail shareholders is that institutionals can afford to wait and to play the long game, whereas the retail shareholders tend to trade in and out, believing that the more they trade, the more money they will make. This often results in a more volatile behavior as a shareholder. And another behavioral difference is that institutional shareholders are far more active in corporate governance, meaning when they have shares, they tend to vote on important decisions, whereas the retail shareholders very often don't bother doing so. In the current context, I would recommend not to invest in the stock, certainly, but to mainly consider the stock for its trading opportunities. The reason I say this is because the fact that it has a large number of institutional investors could be misleading in our decision taking. One of the key catalysts that could explain retail interest in BBBY stock is also the short squeeze potential due to the significant short position against it. There are currently about 70 million shares being shorted off exchange, which is about 55% of the short volume. This can support the theory according to which there is a concerted shorting operation against BBBY, which, by the way, makes sense fundamentally. The stock isn't doing well, and the business model is relatively ill-adapted to the real economy as we speak. My recommendation for BBBY is to start buying it now, with the assumption that the floor is at 80 cents and that there will be no additional sell-off. If the assumption is not part of your analysis, then it would be best to just ignore it and to move on to the next stock to buy. I think that the best thing to do now is to enter in BBBY with a significant portion of your allocation and to hold it for a couple of weeks. See if it can jump up.